Welcome to another episode of Purchase to Profits. I'm Seth Ferguson. Make sure you hit the subscribe button so you don't miss our daily interviews with successful real estate investors. Our guest today did his first deal when he was 20 years old. Since then, he's built a $10 million portfolio of multifamily and student housing. Chris Salazar is the co-founder of Arsenal Capital. Chris, welcome to Purchase to Profits. It's great to have you on the show.
Hey, great to be here, Seth. Thanks again.
Yeah, it's my pleasure. So to kick things off, let's talk about your real estate goals right now. Where do you want to take real estate?
So right now I want to take Arsenal Capital to 2,500 units in the next 3 years.
Nice.
We've just started getting into the bigger multifamily complexes. And I think, with the future growth, I see it being pretty exponential. Just set a pretty good foundation and looking to scale it pretty big here in the next upcoming years.
Yeah. And I'm always curious because some people say I want to own X number of units and some people say I want to own X number of dollars worth of real estate. Why did you choose to go with the units?
We went with the units. We have a pretty good idea of what we're looking to buy. We'll pass on a lot of stuff that doesn't fit kind of that criteria. So, with 2,500 units, we can cash flow about 150 to 200 bucks a door in our markets. So that I just felt with the kind of the capital that we will have access to, I think that's very, it's definitely a stretch goal, but it's achievable as well. It's not like 10,000 units in 3 years for a guy that's 24, so that's kind of why I picked the unit number.
Yeah, for sure. And what sort of deal size are you going after and targeting now that will help you achieve that goal?
So I've been looking at 100 plus unit deals in the Midwest. We're looking for the typical Class C product that we're going to do the value add, business plan on. I've done in the past several 20 units and smaller. We're doing an 18 unit right now. Obviously, we're going to have to target bigger assets to obtain that goal. So that's kind of the next step is finding kind of one or two people that are going to drive more acquisitions for us and source more deals on the bigger asset classes as well.
Yeah. So would you say that deal funnel is the number one thing holding you back now? Like, do you just need to expand that funnel to bring in more flow?
That's a piece. And then of course, we're always looking to expand our kind of, our capital base and look for more, source more equity. We've got a majority of our capital is just tied up in a project. So I think in about a year, so we'll be in pretty good shape using our own capital. And then we'll look to kind of go the syndication route as well to achieve that number of units.
Yeah. And I'm sure lots of people are asking or thinking, oh, you're a pretty young guy. What drove you to real estate and especially, the multifamily asset class?
Yeah. So I started when I was a junior in college. I was doing undergrad at Augustana College in Rock Island, Illinois. And that's where I started learning about real estate there, and that's kind of where I stuck. That's the market that I'm in now. Currently, all of our properties are in the Quad City area, so Davenport, Iowa, and that surrounding area. But I got into real estate just for the freedom and the kind of I learned very quickly after working in an accounting internship that I wasn't fit for the corporate kind of lifestyle. So I knew I couldn't really work for, anyone. And I thought there was a lot more to life. And I always had kind of the mindset to grow a business and grow a team. And so that's what I set my sights on. And I'm grateful that I did. And I didn't go the accountant route with a decent salary out of college. And I kind of, took a leap of faith, and I had people backing me in the meantime. So it worked out really well.
Yeah. And I would say one of our largest demographics for this show is in that 20-year-old range. How did you get started you did your first deal when you were 20. Can you walk us through, how you got started and how you've kind of grown your business since then?
Sure. So I started learning about real estate when I was 19, just through a Robert Kiyosaki book, and that set the foundation and just turned beyond. And it was, I started picking up as many books as I could about real estate, going on the blogs, Bigger Pockets, all of that, podcasts, and then just learning about kind of personal finance as well. I came from kind of like a low middle class family, so we were, always taught hard work, and I just knew that if I, from what I learned very briefly about real estate in a few months, just about, just growing your asset column and kind of the staples that Robert Kiyosaki teaches on, through that, and then through networking with other people, I learned about wholesaling and did several of those deals in college, but that kind of set a really good foundation on how to source, kind of the 1 to 4 unit deals, how to start negotiating on a basic level, and just taught me about personal finance and a little bit of property management as well. Even though I wasn't doing any buy and holds, I was seeing a lot of it and seeing how many people in that kind of space, at least in my market, were more mom and pops. They weren't, they didn't really see it as a business. It was kind of, they either inherited those properties, or just, wanted to retire on a few houses. But yeah, from there, I kind of got really interested in multifamily. I found my main investor with Arsenal Capital. So it's my partner, Kevin, and I. He's provides the capital to do the projects, and I'm the operator of the business. So it's worked out very well. Initially we started buying single family homes. So we bought roughly about 55 homes in the first few months.
Nice.
I think probably 4 or 5 months. And then realized how much of a headache that was from a management standpoint. And so we got into multifamily pretty quick. And, I've just been doing kind of those value add deals ever since. So we're in a tertiary market, the Quad Cities. I mean, you have a metro area of about 400,000 people. The Iowa side, so it's right on the Mississippi River on the border of Illinois and Iowa. The Iowa side is growing a good amount, pretty strong. The Illinois side is very stagnant. Obviously, the state of the economy there is just in tough shape. There's definitely a good amount of deal flow for us, and we're sourcing deals very organically, word of mouth. Basically, we're not spending much money on marketing. So yeah, it was just kind of a low barrier to entry market for me, and I could make mistakes and not lose money. So it was, at least not major mistakes, obviously, but it was a good place for me to learn the business and kind of set the foundation.
Yeah.
For the future.
And so how did you have to change about how you thought about real estate to go from, let's say, a fourplex or single family homes to now going after 100 unit plus properties? Was there a mindset shift that had to occur?
Yeah, definitely. And one of the things that, for me, that I've always believed in is surrounding yourself with, just people that are, better than you, however you want to quantify that. But for me, that meant just more successful financially, and people who were, leaders in their field, or, have just a certain standard that they have to have for themselves, that, most people don't. So I started, so instead of living in the Quad Cities, obviously I live in Chicago, and that's done a ton for me in terms of putting myself in the position of meeting with guys who already have the mindset to where I want to be. And that's just kind of who I hang out with, who I surround myself with. And that really helps me from thinking about maybe buying a portfolio of single family homes to being a multifamily operator across the country.
Yeah.
So,
myself, I got into the real estate business when I was in my early 20s as well. What sort of challenges did you encounter that maybe somebody with a little more gray hair wouldn't run into?
A lot of people, would never trust a 20-year-old with their capital, their hard-earned money. that's a big barrier that a lot of, I guess my peers are seeing right now. And then, just the confidence in these operators, these younger operators to do the work. And they don't really have track record, right? So, you've got a lot of younger guys, and until you have a few projects under your belt, and you really have no track record and credibility to be able to raise the capital and be able to scale. So you really have to set the foundation, and you find a way, whether it be leveraging other people's capital, leveraging other people's experience and track record, to kind of do that and piggyback. And that's kind of what I've seen a lot of people do. For me, it was a bit different, where I was able to raise the capital initially, and kind of just off of a proof of concept and a relationship that I've worked on for 7 or 8 years, and kind of leverage that and build the company off of that.
Yeah. And so, you're going out from scratch. You don't have any track record. What sort of things did you do to build that relationship so you could approach that capital partner to come in with you?
So this was more, so I've known my partner since I was in high school, middle of my high school career. So I was friends with the family, with the daughter. And from there, we've kind of built a mutual trust. And we, he's a big business guy. He's got a huge background in manufacturing. And he saw me. I was ambitious, and I had a vision for what I wanted to do, and relatively low risk, I guess, and just kind of value add single family deals. So I kind of just went after it, but it was just about, letting him know what I was interested in doing, and having that conversation several times, and kind of over time, the trust was there to where it just worked out. So, I see a lot of younger people my age go out and they expect to raise capital right away, and that's, it takes a lot. It takes time.
Yeah. So. Yeah, it definitely does. And have you developed any routines or rituals that you do maybe daily or weekly that helps keep you focused?
Yeah. So on Sundays, I plan the week out. So I have, my weekly goals that I want to knock out, and that kind of translates, break it down day by day on what I need to get accomplished. I get up pretty early. I like to get up at 5 or 5:30, and kind of knock out some reading, whether it be personal development reading or reading, business journals, or just multifamily trade journals. So that's kind of been a bit. I wasn't really familiar with kind of the corporate side of the multifamily. Like I grew up on Bigger Pockets and listening to those podcasts and more mom and pop operators, and instead, you've got guys raising a substantial amount of capital, doing larger deals, and then it's a massive industry. So learning about the more corporate side and scaling it up, that's kind of what I've been kind of more focused on. But definitely getting up, getting coffee, reading my real estate material, personal development material, and then getting workout in kind of gets me primed for the day to go and knock out that list that I have every week. And obviously that comes translated down annual goals to quarterly, and then all the way it trickles down. So.
Yeah. And are you finding, most people ask, hey, what does an operator do on a daily basis? Would you say most of your time is spent, raising capital and working on those deal flow relationships?
That'd be a tough question to answer. But I see myself having a lot of conversations with potential investors. I spend a lot of time on the construction end of things. We have about 50 units under construction right now, and overseeing these things it's about a 3-hour drive from downtown Chicago to the Quad Cities, and not being there and trusting my construction team and third-party contractors is challenging. So I spend a lot of time on that and organizing those projects. I haven't hired a project manager yet. So that's kind of the next step into organizing all of those rehabs. And then overseeing the property management and how our current properties are performing. So it's just different every day, but consistently going out and building relationships, looking to source more capital. And then obviously from looking at more deals and sourcing many deals as we can, and just kind of eyeballing and doing that homework that has a huge advantage, and it just helps us know our market better than anyone else, and we can really find value where other people can't. So
that's why you get paid the big bucks, for seeing things that nobody else can see. That's what it's all about, right?
100%.
Yeah. So speaking of projects, is there a deal that stands out as a keystone deal?
I've got, so initially we did a 20 unit deal. That was our first multifamily, I guess technically, but it was 5 4-unit deals and they were all in a row. So we bought the 20 units. It took us about a year to vacate, complete the rehab, value add, and then lease up and stabilize them. So over that course, let's say we bought the units for 20 units for 650,000. I'm sorry, 600,000. Added around 250 in value with the construction, and we sold for around 135 within a year later. So it was about it was like exactly a year. Turnaround time on that. So that was probably like our first kind of breakthrough deal where, okay, we sourced the deal that was good. We were able to add value and exit in a year and do pretty well on it. So that was kind of like to see the full cycle. So right now we have several projects going on where we know, I mean, they're going to be successful projects, but we haven't exited yet. So, that kind of helped build the track record, and, we can use that sample deal obviously to market ourselves. But that was kind of the first deal. And then right now we've got 120 unit under contract. So that deal has kind of opened up a lot of other opportunities to, just to kind of build the credibility. And we're already one of the bigger operators in the market. So people take us seriously when we look at deals, and that has a huge value.
Oh, for 100%. So with that 20-unit deal, how did you source it? Did you go direct to seller, or did you source it through a broker?
We went through a broker. This deal was sitting on the market for 6 months, and I don't know if it was just unpopular at the time. So this was November of 2017 when we closed on this. And I wasn't sure, I wasn't sure why it sat on the market for so long. I looked at the deal over the summer of 2017. I remember it was priced too high. We finally got them down to where we wanted to be. We won the deal. And but yeah, it was just through a broker relationship. And that was our first deal with that broker. And every deal since then has been with the same broker.
Yeah. Well, and that's huge too. I think you bring up a good point where it's, you can't just be in it for one transaction with each broker. You have to build that long-term relationship, because that's where that flow is going to come down the road.
Definitely. And so, this guy stuck up for us on several other deals where typically they would have went with a different buyer, but we've been a strong buyer in this certain niche in our market, and we can close. So it's definitely key to build those relationships. But again, they do take time.
Yeah. And you said this deal sat on the market for a long time. Why do you think you saw an opportunity when all the other eyeballs just bypassed it?
Yeah. So typically the way that I look at a deal is I want to add the most value that I can. And the way we do that is through cosmetic improvements. And a lot of people in my market where, we do, the typical investor in our market would be carpet and paint, and they would be putting on basic finishes. We do the condo style units. We have a pretty nice product. We're tiling out the showers. We're putting in backsplash. We're doing, granite countertops typically. We're doing a pretty heavy lift value add, about 12,000 a unit on average. Mm-hmm. And, we're taking these things up, and we can push the values, push rents $250, $300 a unit, whereas other people could only really command $50, $100 more. So we're able to compete and offer even sometimes a higher price, just because we can kind of change those values so drastically, whereas other people really don't.
Yeah, most people go in for the lipstick, like you said, and they're spending about half as much per unit than you are.
Yeah.
But you're getting the results with the extra work you're putting in. That's great. And with the deal you have under contract, I know you can't say too much about it, but is that more of a heavy lift as well?
This is a deal, and it's so there's a challenge. It's just kind of a completely, obviously it's a 120 unit. So my challenge is that I haven't done a 100 unit deal, and we can't really qualify for the best debt. So we can't can't get government debt on the property. So we're going to use a conduit lender, and we like to do the value add, but basically we'd achieve the same return as if we just kind of kept it as is. It's performing well right now, and really, it's kind of well located, but there's it just kind of a lower class stigma to that specific location. Mm-hmm. It could be a nice location eventually, but right now it's very typical Class C product, and to deploy a bunch of capital into it doesn't really make a ton of sense. We just keep it as is and maintain it. Yeah. So that's kind of the business plan on that one. My first thought was obviously to push make it really nice, push the values as much as we can, but it's a good asset and a good hold as is, so we'll keep it that way.
Yeah, we'll have to have you back on in a year and a half and let us know how it's going.
Absolutely. Yeah.
So how has getting into real estate changed your life so far?
It's just created a lot more freedom in my lifestyle. So so when I was working for that accounting firm, it was a good firm. It was a top 10, I think, accounting firm. And I just hated the idea of sitting at a desk all day and kind of working my way up the corporate ladder. Whereas I thought if, my value in the marketplace should be on the value that I'm creating, and I figured I can create a lot more value and change a lot more. We're building really great communities in our market. So there's value there that, we get paid on the value that we provide. So that's kind of what I saw as a bigger opportunity to add the value and to, I'm sorry, I got a call on my.
It's all good.
Yeah, so I just, for me, there was the aspect of having that freedom was huge to me, and I would, I'm not the type of person, like I said, to work for a corporation. Yeah, so I want to build a company.
And where do you see yourself going with your business? Let's say 10 years from now. Like, where do you think you'll end up being?
Yeah, so 10 years from now, I want to be one of the largest operators of multifamily in the Midwest. We have big visions for what we're looking to do. And I think with the market, softening up a little bit, I think in the next few years, there'll be a ton more buying opportunity than there is now. And we'll have that foundation, that track record to be able to compete in the secondary and maybe some major markets if we can find the yield there. But we're looking to really dominate in the secondary and tertiary markets across the Midwest. We like markets in Iowa. There's several markets we haven't even explored yet that I'm sure would definitely be, on our list. So, I'd like to have 10,000 units in the next 10 years, and I think that's very realistic.
I think that's an awesome goal. That's great. Thanks. So Chris, if somebody's looking to get in touch with you, maybe learn more about what you're doing, where can they find you?
Yeah, they can find me on my contact info is on our website, arsenalcp.com. Or my cell phone's on there as well, and my email. So that's the best way to contact me. I'm also on Instagram as well. It's Chris J. Salazar. So either one.
That's great. Well, Chris, just want to say thanks so much for taking the time today and sharing your success with us.
Yep. Thanks a lot for having me on, Seth.
Yeah, it was my pleasure. And to you, our reviewers, I wish you well on your journey from purchase to profits. See you next time.